Weak global cues and tensions in West Asia keeps Dalal Street deep in the red. Markets record their biggest weekly fall since June of 2022. Investor wealth of 18 lakh crore rupees wiped out this week. On this week's edition of Editors Roundtable, we decode the market action. We put the spotlight on the massive FI selling, and we tell you what to expect from IT in the second quarter. I'm Reema Tendulkar, and with me are Prashant and Nimesh. Hi guys, so much can happen in 1 week, right?
And that too in a truncated week, right? I mean, we just had 3 days, and look what happened to the markets and what the kind of FI flow which has been. Like, it's crazy.
4, right?
4 days.
4. Yeah, I mean, I'm sorry, 4.
But, absolutely agree, because sometimes when markets are doing very well, we wonder, well, what can go wrong, right?
Yeah.
I mean, there's nothing on the horizon which can go wrong. But as it is always the case that the risk comes from somewhere which you can't foresee at that point.
Yeah.
Who would have thought that China suddenly doing well is going to cause, is one of the reasons.
Yeah.
And of course, as Nimesh said, 2, 3, when it rains, it pours. There is China, and it happened in a real size way when we were shut. I mean, the day before. There was Middle East tensions that Tuesday evening with the flare-up which happened together. Oil prices are up $7 since. So I think it's all kind of coming together, and earnings as well. So that Dabur numbers, I mean, actually, you take a look at the financials, Dabur, DMart.
SEBI F&O, not to
SEBI
forget
F&O.
that.
That
Yeah,
also
not
was
to forget.
Tuesday evening.
Tuesday evening.
So, yeah.
Exactly. 1 week and, things can change. And the difference between last few weeks and this week is, until last week, I've been saying, for a while now that the feedback is people are not making money. This is a week when people have really lost money.
Yeah.
And this is just a beginning. And we've not seen a sharp fall in the mid and small cap. That's where the large amount of money is. It's not about that. The fact is, this week was all about large caps, right? And in fact, the feedback was, now it's a time for large caps to do well. I did a piece as well.
Yeah.
So, and you've seen a sell-off like what? Yesterday, the Reliance net selling was almost 4,500 crores. That's the amount of selling.
Actually, from the recent respective peaks, I mean, actually not the respective stock peaks, but from the Nifty made a high, which is, I think, 26th of September.
27th September.
27th of September.
Friday.
Reliance is down, I think, about 8%, 8-9%. Axis, HDFC, and ICICI are down between 5 and 6.5%. And of course, L&T and a few others are. So, I mean, the point now is the time for large caps. Exactly. And boom, I mean, you've got.
And the fact is that none of these, large, losers have reported the quarterly update. So it's like not that there is a fundamental reason for them to fall. It's only pure FI selling which has dragged the stocks down 8 to 10% in just 1 week.
I just want to say one more thing, and this is interesting because I've not heard it anywhere else. An investor messaged me, he said this, to his mind, he said, it looks like when China reopened after COVID. So if you remember, chemical companies here were going through this mad bull market. And then China reopened, suddenly Chinese factories were up and supplies came back on. And that was a top for the Chinese, for the Indian chemical companies.
Correct.
And then started their de-rating process. So, I mean, China in a different way, sort of acting as a bit of a gravitational pull for what's happening here.
In fact, it's great to introduce then Aman Chauhan, the fund manager at Abacus Asset Manager. He's with us on the show. Aman, thank you very much for joining in. So what did you make of the kind of carnage, the bloodbath on Dalal Street? And do you think this is the beginning of a deeper, widespread correction in the market? Aman, you're on mute.
Yeah, hi, sorry. Not really. I think the fast money has moved out of India and maybe some of that has gone to China, but it's not, I don't think it's an India versus China kind of a trade. In the near term, maybe there could be some tactical money which could move to China, but India is getting it inflows on its own merits. The growth rate here is improving and people are not increasing the allocation in China. There could be a trade there because obviously valuations there are much more attractive than what in India is. But we are at least not looking at this as an India versus China kind of a story.
Right. In terms of doing anything at all, Aman, have you done anything over the last 5-6 days? Have you been adding or watching?
Gradually adding, not aggressively, but gradually adding. So we had cash in our portfolios waiting for days like this where we get a better entry point, and we have used that gradually to increase our exposure, but nothing substantial as such, but definitely not selling just because of this.
Any feedback you've got? I mean, do you also, because I mean you've been in the markets a long time, Aman. Money is fungible, right? I mean, it's very, we can speculate at best, intelligently speculate whether this money which is leaving India is going to China. But do you reckon some of that is happening at the margin?
Yes, definitely it is happening. So hedge fund money, fast money, long short money, that money is definitely moved out of India and moved to China. So people have booked profits in India, they're sitting on good profits in India. And once you see momentum coming in China, it could be for some other country also where they see a momentum. Right now it is China. So that fast money, hot money has definitely moved and gone into China.
In fact, let's talk about then this money which is moving perhaps away from India into China. Nimesh, you've done some numbers and some analysis.
Well, Rima, we are used to records, right? And this week was a record as far as the FI selling is concerned. Let me just go to the wall and explain why I'm saying this. If you look at this week, as I said, it's a kind of a record. It's been the highest single-day selling by FIs in the India market. Yesterday, we saw a figure of 15,300 crores. That's the highest single-day selling in the last 4 years as far as the India market is concerned. This is the number that I'm talking about, 15,243 crores to be precise on a single day that the FIs have sold in the India market. But if you break down that selling was largely into 4 or 5 large cap names. The split will come up. Reliance saw delivery-based selling of close to 4,450 crores. HDFC Bank close to 3,700 crores. ICICI Bank close to 1,700 crores. Axis Bank nearly 1,700 crores. And Tata Motors almost 1,500 crores. This is the single-day delivery-based selling in the 5 large names, what we saw in yesterday's trade from an FI perspective. But if you look at the overall FI selling, it's, as I said, yesterday was the highest in terms of numbers. These are the top 5 in terms of large selling. June 4th, the election day outcome, when we saw 12,500 crores of selling in a single day from FIs, 10,500 crores on Jan 17th. Again, August 5, 24, we saw nearly 10,000 crores of selling in a single day. So is on Jan 18, nearly 10,000 crores. And September 30, we saw close to 10,000 crores. So these are the 5 large selling days as far as the FI selling in a single day is concerned. But again, as I said, this is kind of a record for us as well. But if you look at this week, in the last 3 trading sessions itself, the FIs have sold nearly 26,879 crores. That's the kind of number you've seen only in the last 3 days. And that's also because China has been done phenomenally well in the last 1 week. To this week, it's shut. And that's the reason why. However, this year, the FIs are still net buyers, but that's largely because of the block deals. That is close to 70,000 crores. So that's the FI number for the whole year. But as I said, this week is what we need to take into account. Now, CLSA put out a note just 1 week back, and this is what their view was. They believe, the selling can intensify largely because 90% of the money in the emerging in India comes to the non-India dedicated funds, which is the EM funds, and that's where the large supply is going to be. So there is a risk of selling India to fund Chinese market, at least in the short term. That's the CLSA view. And on back of that, they've identified few stocks. In fact, they say that they've seen a similar correlation when India got sold into, when the Chinese market rallied in November 2022. They've identified few large cap names which are vulnerable to sell off if this money moves from India to China. Within the PSU basket, Oil India, IOCL, these are a few names to track. Even BHL is what they are identified, which can see selling pressure. Godrej Properties, Bajaj Auto, Ambuja Cements, Macrotech Developers, and Voltas. These are the few names which are vulnerable to FI sell-off, largely because there is a FI holding and the stocks have done well. But clearly, this was a week when 20,000 crores in a single, in just 3 trading sessions. So that's the kind of sell-off we've seen from FIs in just 1 week.
Absolutely. And, let's put some of this to Aman as well. Aman, you heard Nimesh explain what has happened, and the last point, which is what is the most vulnerable part of the market. Yeah. You want to weigh in, Aman, valuation-wise or ownership-wise, positioning-wise?
So typically what happens is when you want to create liquidity, you tend to sell something which is more liquid. It may or may not be fundamentally right to sell, but you need liquidity in that day. And for that reason, we have seen more of large cap selling than mid caps. And within large caps, obviously the financial markets, the banking stocks have been the most vulnerable. As he mentioned, HDFC Bank, ICICI Bank has seen the maximum selling along with Reliance. So these are one of the most liquid names in the market. And that is where I believe bulk of the selling is limited. Also, what happens is not every money that India gets is direct money. It comes via emerging market funds, and also lots of passive money comes in, which is index funds. Within this, there is easy flow coming out. So we can decide whether to exit India and get into China or some other market, right? So the ETFs, I believe bulk of the selling has also happened because of the ETF flows going out of India. And that's, I believe, bulk of the selling pressure would have come in. And hence should not be taken as a fundamental view that something has gone wrong with India, something needs to be worried about. It's more of a, you can say, liquidity tactical move, which we have seen.
Aman, how concerned are you about earnings disappointments? Because so far the Q2 business updates, whether it's from Dabur, Avenue Supermart, M&M Financial, they've all been a bit tepid. Is this a big worry for you?
It's not, but it's definitely a thinking point, and we are very closely monitoring this. Most of the companies that we speak to are talking about a second half recovery. So they are seeing that the second quarter also has not seen a decent recovery, but post monsoon and a good monsoon, everybody is expecting the festive season in the 3Q and 4Q to come in and pull the demand or pull the growth rates up. That is a key monitorable, because if that doesn't happen, then the premium at which India trades is at risk. So far, not too worried, because the expectation is more for a 3Q recovery than a 2Q number right now. But monitoring the 3Q is very critical.
Aman, you briefly spoke about deploying some money in this fall in the last few days. While the fall has been largely in the large caps and you all are more into the mid and small cap, what has been generally your buying interest? Are you buying still into the mid and small cap, or you are gravitating towards the large cap names now?
No, for us, it's never a large cap versus mid cap trade. We find value within large cap and within mid cap at any given day or any given point of time. So the deployment has been mixed. It has been both large cap as well as mid caps. Stocks which were on our radar, waiting for a better entry point, is where we have deployed cash.
All right, Aman, stay with us. What we're going to do is take a quick commercial break here. We'll come back, but I just want to leave you with some of the important voices, especially on the global side that we got, putting into context what we've seen flow-wise between the selling here in India and, of course, the rise we've seen in China and the interpretation thereof. Listen and take that break. We're back.
I think, look, there's a lot to like in India, as you guys are extremely aware. So the combination of demographic plus productivity gains, digital inclusion, infrastructure, and so forth. I think the big picture in India continues to look very, very favorable. I do think if China is going to follow through on its stimulus promises, which we may see as soon as next week, it's quite likely that some of the money that global investors have put to work outside of China, be that in other emerging markets or other parts of Asia, probably gets pulled back into China.
Even though flows to India funds have definitely waned, they haven't gone negative, and I think India remains in quite a healthy position. It looks to me, at least from this week, that investors were pulling money out of liquidity funds in Europe to fuel this rotation.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo, as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side. And you need a sizable fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.